Hi, everyone. Welcome back to Wall Street Silver. Joining us today is Eric Strand, fund manager and founder of AuAg Silver Bullet Funds. Welcome to Wall Street Silver, Eric.
Thank you very much. Nice to be here.
Pleasure.
So Eric, you're based in Sweden, and I know just to introduce you to the audience, it's your first time with us, but you're a manager of a fund that specializes in silver and gold investments, and so you're watching this more from the European perspective and what's going on and how this affects the silver and gold markets. So I wanted to get you on to talk about these things. So the latest news is the European Central Bank is dramatically starting to raise rates after many years of sort of being behind the curve on fighting inflation. And one of the things we just saw last week is Madam Inflation, Christine Lagarde, she raised rates by 0.5 point for the European central banks. So how is this impacting sort of the euro versus dollar? And underlying that, what we really care about is like silver and gold, this change in interest rates. What is that what you're watching right now?
Well, I think it's really interesting because we will get this change in the dollar price of gold and silver because, I mean, it has been a headwind for gold and silver in pricing in dollars, but I mean, they have been strong in Swedish krona or euro, but the dollar has been so strong because all currency traders have been long dollar, short euro, short the yen. But I mean, now the Fed is almost there. They can't raise too much more. The market is feeling it's topping out there. The pivot may come sooner or later. And now Europe is starting to raise rates. They will continue raising rates. So when the currency traders start to say it's better to sell, go short, maybe shorting the dollar even, and go long euro and the yen, I mean, the dollar will go down. And we have seen it now already for the last 2-3 months that the dollar is topping out, coming down, and that gets a good win for gold and silver. So I think we will see a lot of that in 2023. So especially the prices for gold and silver and dollar will go up a lot, maybe even more than in euro and krona then.
Now, what is causing the European Central Bank to want to raise rates so much? They've only raised them they were below zero for a while, for years, many years, right? And they have massive quantitative ease, a massive buying of bonds, but now they're up to what, 2%? How high do you think it's going to go?
I think it's like history is always the same. They are always behind the Fed. I mean, they start to lower after the Fed. They start to raise after the Fed. So it's just they are always behind Fed. So Fed goes first, ECB follows, and then the smaller central banks follow ECB. So they will continue to raise rates. But also, I think a lot of things in the system will soon break because the system has so much debt this time. I mean, we had a debt crisis 2008, and now we have more than 2 times the size of debt, and these rates. I mean, it won't work. So the troubles will come, but the problem is with the Fed, or the central banks, they always go too far. So they will only pivot when something breaks. But I think it will also happen rather soon. And when they pivot, I don't think ECB will be able to come to the same level as the Fed. And when that happens, when they really pivot, I think gold and silver will rise from that as well. So I mean, there will be a double
when
thing.
You say something breaks, how do you interpret that as something's breaking? As in the credit markets freeze up, or no one can get mortgages anymore? What is your definition of something breaks?
Yeah, I think with this situation we have with these rates, I mean, it will be really difficult for people to pay every month for the cost for these higher rates. The prices on houses is going down. I think a lot of companies it costs the companies a lot of money when they have these rates, so there will have to be a lot of layoffs. People get unemployed. So it will just and we also have, with this strong dollar, I think a lot of weaker countries have big problems because they have had a lot of debt in US dollars. So we can also see something break there, but you never know where it happens, but it will happen.
In recent years, a lot of companies have taken out junk debt, high yield debt, right? And most of that stuff it matures in 3 to 5 years. And so as all of that high yield debt that they were getting some of that high yield debt really cheap, 4%, 5%, 6%. for junk debt, junk bonds.
Yeah, and they also raised debt to do a lot of buybacks on really high prices. I mean, that's not really healthy for the system.
Yeah.
And this is very interesting for our sector because gold and silver miners, they have been reducing their debt the last 10 years a lot. So they are in a totally different position.
Oh, yeah. Yeah,
So
companies like Barrick and Newmont and all those big ones that have lots of huge cash flow, they've paid down like most of their debt.
Yeah.
And they have massive cash flow, positive cash flow. It's like they're the healthiest.
And becoming so share owner friendly, raising the dividends. I think Newmont is at 5%. So I mean,
5%. Yeah, I mean the dividend, that's the big producers. Yeah, the dividend rates are getting crazy for them.
Yeah.
But
so that's good.
What we're seeing right now though is when all of that high yield debt matures and they have to roll it over, essentially refinance their junk bonds. It's like they're getting quoted 12, 15, 18% now. Wow. Whereas when they first took out all that debt in the past 5 years, it was at, below 6% for essentially companies that have very low credit scores, right? Junk debt. Is that the freeze up in the system where those less profitable companies, the B credit grades, the C credit grades, just can't?
I think we'll see layoffs in almost all sectors. So I think it's difficult to really find if it's the bad. I mean, the zombie companies for sure, they will go down hard. I'm a little bit surprised it hasn't happened already in that level, but I think it will come really soon. And I think the central banks will start to get nervous when so many people get unemployed. We have so high costs on energy, on the loans we have. I think the system can't take it.
Yeah. So looking at what you were talking about, where the dollar is the European Central Bank raises rates, and the Fed is now at the point where they're getting close to slowing down and pausing. So relatively, the euro gets stronger compared to the dollar. And that's showing up in what we call the DXY, the dollar index. And you can see here that we were in this massive uptrend for the past, I don't know, over a year, or this is a 1-year chart. Let's show take it out a little farther. And you can see the dollar's just been in this massive rally for the past, let's call it even 2 years, really. And we've broken that uptrend. And the blue line I have here is the 200-day moving average. So we've even fallen below the 200-day moving average for the dollar index. Now, we're currently around the 104 range for the dollar index. Do you see that continuing lower? I mean, what's the long-term outlook here? And then we're going to talk about silver and gold, how that's affected.
Yeah, I think in the end, we're going down at least to the 96, maybe, or where it all started.
Okay, so 96 would be back in this range where we were, a year and a half ago, right?
So maybe we don't go all the way down to 90, or what do you see on this chart? But 96, I think, where this last really bull for the dollar there started going so strong. I think
that seems very within range, especially if the Japanese central bank, which has expanded their range of their target rates.
And all the currency traders, they were on one side. They were all long dollars, and when they started,
so they've all been caught on the wrong side of this trade.
Yeah, or some maybe were smart, starting to load off the dollar here, and that's why we see the dollar coming down as well. So I think they will.
Interesting.
They will help the dollar coming down, because nobody wants to be long the dollar at the moment.
Well, so many banks are massively leveraged with derivatives like Credit Suisse or Deutsche Bank. Is there any risk there that they get so on the wrong side of some of these interest rates and currency trades that there's systemic risk for any of the major banks or hedge funds?
I think there are really big risks here, because the currency market is so big, and if they didn't change positions here, and the moves are now so big in the currencies. We have the dollar and the euro, the two largest currencies in the world, and they should maybe move 2% or 3% in a year. If you not a small currency, but these two big ones, and now they've been moving 15% in 1 year, the two largest currencies. So the system is really, really
And with the massive
or
leverage that the investment banks use, a 10% move could equal, a 10x or 20x change in a position, correct? I mean, it's not a tiny 10% move in their position when they're using derivatives.
it's really interesting to see what happens here. But in the end, I think it's a really good thing happening for the gold and silver prices, and especially the prices in US dollars.
Well, you can see, okay, I've switched from the dollar index chart. I've switched now to the silver chart. And you can see here, the dollar index you see breaking down below the trend and getting below the 200-day. But the exact opposite happens for the silver chart. And I'll briefly show the gold chart and the gold chart here. So we can see silver here it was in this downtrend for the past year.
Right.
That was very painful for our audience on Wall Street Silver. And we were crying for a long time. And so we've broken this downtrend decisively, and we're way above the blue line here is the 200-day moving average. From a technical perspective, this is just incredibly bullish for silver, isn't it?
It is, but I mean, we also see the tightness in the physical market, and when it gets really tight in the physical market, and especially for the industry bars, not for the
1,000-ounce bars.
Returns. Yeah, I mean, that's when the price will just fly. I mean, you need silver in everything. It's computer, mobile phones, cars, you know it. And if the producers producing these products can't get their silver because there is no silver to get, I mean, the price will just fly. And of course, then all investors will follow as well, because then they want to be on with the race, and it will go even further. So, and we also like to look at the COMEX to see how the commercials are positioning themselves or not. And it looks really promising that all this, if we want to call it manipulation on the COMEX from the commercials, or managing the market, maybe they want to say, may be over. And there's maybe only one big bank that is not really good at trading precious metals that is on the wrong side. And maybe after all these fines we have had for managing the gold and silver market, we are really hoping this is the end of it, and then the unnaturally low price for silver will also disappear, and that's a one time of happening. I think that will take silver a long way.
Well, I've put here on the chart that I hope you guys can see is the previous highs from August of 2020 and January, February 2021. We briefly touched 30 each of those times. So that definitely is the big, that's the big hold up, right? It's if we get up to 30, do we blast through it, or that's the big stumbling block again?
I think this time I think this is the time. It's not so much that can stop it. I mean, the dollar won't stop it, and with this physical tightness, especially on the big bar for the industry, and on the COMEX situation, it has never been better. I mean, we have hope for it to happen before, but this is really the time, I think.
Yeah, and if we get through 30, there's no break stopping this train, really. I mean, I think it goes much higher.
No, yeah, for sure. And I mean, we like to see the gold-silver ratio to go, I mean, coming down to 30-1.
Oh, yeah.
And maybe this time it won't stop with 30-1, but even go lower, because it could go, I mean, 16-1 is the natural occurrence. We are mining 8-1, I read or hear. So it could go to 10-1. I mean, as silver, you cannot run this world without silver. The industry needs silver.
So, Eric, there's people who invest in the physical market. A lot of us, we buy physical silver and gold, but there's also the stocks, which I know is what you like. So just what are the two, let's throw out two names that you really like these days that you think if people who are interested in the silver producing companies should take a look at.
Well, we have approximately 30 holdings in our silver bullet fund, and maybe two of them, if we take one of the big ones, it's a name that has been with us for a long time. First Majestic, I think is interesting from a lot of different angles. It has had some problems with the but still, I think it's really, really interesting to see when it gets going. They have been mining a lot of silver in the last period, and I think if we can get the shorts out of the equity, I think it will have a good run as well.
Well, some of their major mines are like San Dimas, and they've got Jarrett Canyon in Nevada, which they're dramatically lowering the costs on. I know that they're trying to raise production from, where are they at right now, and what's their goal in the next year or two?
I think they have had a rather good production anyway, but still, what we do like is for our companies to be in a good jurisdiction.
Yeah.
And the jurisdiction is very important. Even if we have seen some troubles with Mexico the last year, I hope there won't be too many problems, but I think the jurisdiction is really, really important now, because what we see is that countries, they want to meddle in, to do stuff, raise taxes, control things, and I think that's really important to look at the jurisdiction. Any companies having mines in the US or Canada, I think that's really good. But jurisdiction is very, very important. And I hope Mexico will be friendly and stay mining friendly, even if we've seen some issues with it.
Another company that you mentioned to me was AuAg in Morocco. And what is it you like about this one?
Well, that's a smaller holding still. We have it at 4% in the fund. I mean, First Majestic, we had it 8%. But AuAg has grown in the fund from 1% to 2% to 4% holding. And I really like the management with Benoit. I mean, it's a great guy. We had a call for a couple of years ago, and we started to buy at 150, and so that was a good entry point.
Yeah, it's like up at $9 a share now, right?
Yeah,
well, I do know this one because I'm invested in it. They're producing 1.6 million ounces now, and they're on pace to grow this up to 8 million ounces a year by 2024.
And what we do like is the management with Benoit, and we also like that they're very pure silver miners. That's what we focused on. We don't want the largest producers of silver, because they are most often producing silver as a byproduct. We want the percentage of silver to be high, and AuAg is a really good example for that. They are in Africa. We are a bit cautious about Africa because there are difficult countries jurisdiction-wise in Africa, but in the AuAg countries, they are that's a good place, safe place, so that's not a problem either. And if I'm correct in history, this is the place where the Romans got their silver, but they didn't have the possibilities to go deep down, so the mountains there should have a lot of silver.
Well, Eric, thank you very much for joining us and sharing your opinions on what's going on in the market these days. We really appreciate it. And let's do it again in the next, I don't know, 3 or 4 months. We'll have you on again as the market develops.
Yeah, nice to meet you.
Thank you, Eric.